welcome this evening. Had a moment to get my act together on our slides here. I do want to thank you all for joining us, and I am just pleased to be able to be back here online with you guys again. We're hoping to get back in person, but here we are online. Tonight we've got Melissa Winkler with Kestrel Consulting, who is going to be talking to us tonight about ESG and US municipal markets, a just transition to a decarbonized economy. And I'm going to let her introduce herself and get a little bit more into what she does in just a moment. Tonight's agenda is going to be just a brief overview of what's going on in CRES and with BCRES. We'll follow up with a presentation with Melissa, which is what everybody's here to see. And that'll be followed by Q&A. So please add your questions to the questions tab and hold on to those, and we'll answer questions at the end. And I want to open this up by saying that we are so excited to be having the CRES conference returning for the first time in years. And it's going to be a really exciting event. It's on August 6th. And it will be in Golden. It's an all-day event, and it is, thank you so much, Reed, again, for adding these QR codes to these slides. I just want to let everybody know that any registrant, not just attendees, but anybody who's registered is going to get a link to this presentation tomorrow, and all these QR codes in this whole presentation will be included. So you don't have to worry about capturing these codes as we go through them, but they are included on the slides. So that would be the way to register for this event. And I couldn't resist, had to mention that we've got Hunter Lovins, a big supporter of CRES, and we've had her at our BCRES presentations several times over the years. She's going to be one of the big speakers, welcoming everybody in. It's going to be a great event. Please check it out. She'll be there along with Scott King. And we've got Martin, who runs our Jefferson County chapter, has done a great job on putting this together. So very exciting event. If you want to see more about what's going on with our events at CRES, check out our events calendar. Again, there's a QR code, easy to find also on the website under the events tab. Chapter events are specific, and then events have, our events tab has all the events underneath that. For instance, Dr. Chris Hine is going to be presenting on wind energy and wildlife. I thought that was a really interesting topic, very interesting because it's wind energy. You know, we're the Colorado Renewable Energy Society, and we also do energy efficiency, clean transportation efforts, energy storage. You know, near and dear to our heart is renewable energy, and how to talk to people about wind energy is really important. I've been confronted by this topic several times. So Dr. Hine will be presenting on that. That's through our sister chapter in Denver on June 16th. If you want to see any of our recordings, you can go to our YouTube channel. It is, again, a great QR code here, and you'll see this again in the slides in the video that I'll send out tomorrow, the link for the video. CRES has done a really great job of recording and posting these presentations on our YouTube channel, so please check us out there. And if you didn't know about it, we have an amazing, quite robust and involved policy committee. And they are passionate about policy in Colorado, and there's a great legislative tracker that we have here. And there's, again, the QR code. Check out the latest activity in the Colorado legislative session here. There were some big wins this year. And if you want to join the policy committee, be a fly on the wall with the policy committee, you can also use this QR code to do that, and you know, to join or just check out the legislative tracker. So check it out. Just a bit of trivia. CRES as an organization was founded in March of '96. The first board meeting was May of '96. BCRES was founded in August of 2014. So we've got a long legacy and just like to brag a little bit about the this long-standing presence here in Colorado. We at BCRES are putting together a happy hour. BCRES doesn't generally meet do presentations in July and December due to people traveling and holidays and summer vacations and so forth, but we are looking to expand our BCRES steering committee and talk about how we can move back into in-person events. It's been a bit of a challenge, but the best thing to do is to come together, have a beer, and talk a little bit among ourselves and get to know anybody who's interested in volunteering. And we will be sending out more information. As you know, we like to say here, more QR codes. This has been amazing that we've got this included here because it makes it so easy to find the CRES website, to get in touch with via email or to leave events. So again, this is our chapter, but we are also coordinating with other chapters on webinars and trying to have a coordinated effort each month so that we aren't piling events on top of events. Please check us out in any of these with any of these QR codes. And with that, I would like to introduce Melissa Winkler with Kestrel Consulting, and I'm going to let her talk a little bit about what she does.
Great. Thanks, Kirsten, and thanks, Reed, for having me here tonight. I'm really excited to launch into what ESG looks like and what it means in the municipal market, as well as green, social, and sustainability bonds. I'll give a little bit of background about myself and Kestrel, and then we can launch in. So I have nearly 2 decades of experience in finance. That's really my background. A little bit in asset management, but the majority of my career has been for public finance, so investment banking for municipal bonds. Here in Colorado and throughout the West, I'm actually a native from Colorado. I live in Lyons, so up in Boulder County, and I'm an alum of CEU. So that's a little bit about myself. I currently serve as Senior Vice President for Kestrel 360. We do business as Kestrel Verifiers and Kestrel ESG. I lead our sales and strategy for the company. We have really 2 lines of business right now, where we, one, our Kestrel Verifiers. We focus on providing assurance to the capital markets for green, social, and sustainability bonds. So we're looking for positive environmental or positive social attributes in bond financed activities, and providing that assurance to investors in the marketplace of what's real and true in an investment. And then we have a data product where we're rolling up a lot of complex information and ES and G attributes within bond finance activities into a score for investors to use for investment decisions. Kestrel began as Kestrel Consulting. Our CEO and founder, Monica Reed, is an environmental scientist. That's her background, and she ran a very successful consulting company out west and worked with a lot of state and local governments and thought leader clients, mostly in California and throughout the West, before kind of launching into Kestrel 360 and what we do now. I'm proud to say that we are the market leader for ESG solutions in the municipal space or the municipal market. I think a lot of that comes from Monica's really deep, rich background and knowledge in environmental science. She brings a practitioner's approach to everything that we do here, and we've been successful at really making science accessible to the capital markets. So that's a little bit about myself and our company. Let's see, I'm gonna be a little bit slow here because there's my bar. So I think right off the bat, I just want to launch into green bond opportunities in public finance and really make the connection for those of you online tonight, what that can look like for perhaps you and your role and what you do. So, I mean, the municipal market finances, the majority or over 2/3 of our nation's infrastructure, so both physical infrastructure and our social infrastructure, and that's through many different sectors, water, sewer, housing, transportation, utilities, you name it. That's what municipal bonds finance, that infrastructure. And within those sectors, there's certain green categories under the green bond standards and principles, and we'll get into that in a minute. But these green categories, I really wanted to kind of point out because I think they're probably near and dear to members of CRES and to what you do every day. So we're looking for, and I'll say one more thing about municipal finance is the majority of municipal finance is project-based. It's project finance. So rather than taking out debt or loans or bonds for general corporate purposes, they're focused on a specific project. And within those projects, you can see a variety of ways that green bonds can come to fruition. That can be through green buildings. So new buildings or retrofits, new energy efficiency projects within buildings. Sometimes we see certain, thought leader clients or states, cities, counties that actually have very forward-thinking or forward-looking zoning. And so, the entire state of California's building code really would qualify for, a green bond. Because of those standards. Other opportunities for green bonds through maybe some of the work that you guys do would be in grid modernization. This can even be in microgrids. So if you think about grids at universities or airports, that's something that we see in our world a lot. Any type of transmission or distribution, of course, solar project, wind energy, community solar even, maybe small hydropower here in Colorado. I think, beyond these categories, there's other types of projects. I'm thinking R-PACE or C-PACE, so property assessed clean energy is something that we can see as a green bond in our world, and maybe even projects for climate change adaptation. So unfortunately, I think many of us are probably all too familiar, with wildfires, and this can look for safety measures for wildfires, whether it be forest thinning or projects that are looking at fire resilient building codes. I know that both Utah and California have fire resilient building codes, and those can be financed with green bonds. Oh, I don't know how I did that, but it just moved for me, so thanks. So let's talk a little bit about what is ESG. I'm sure you're all familiar with the acronym Environmental Social Governance, but I kind of want to focus on, what ESG is and what ESG does. ESG is really, or I think of ESG as an investment theory or an approach to investing that takes a broader view of material risks and opportunities. So it's really looking at these externalities that haven't really been incorporated with traditional finance. And when I think about risk, that investors might look at, they're looking or needing to understand what type of exposure these these bonds or these bond finance activities have, and that could be exposure to both physical climate risk and transition risk. When I think about opportunities that investors are looking for, they're really looking for any type of positive environmental or social outcomes due to this project, or even better, looking for some sort of contribution to the solution to climate change, water scarcity, or food systems that go along with that. And there's just such a wide spectrum or wide variety of investors within kind of that Venn diagram. Some are just going to sit in the risk camp. Some are going to look at both the risk and opportunity, and some are really only focused on the impact. I would also say that there's in recent years a lot of tools being developed to help investors really understand what their risk and opportunities are, and that's largely what Kestrel does, right? So there's data products out there for physical climate risk, and some that data products that are informing more of the transition risk or transition alignment. And then, green, social, and sustainability bonds. It's a label, just kind of like you would have an organic label on your, your bananas or your vegetables at the store. It's a label that is affixed to bonds or any type of debt instrument out there, signaling to investors that those bonds have some sort of positive environmental or social attribute. All right, sorry, I'm having a hard time finding my mouse on the screen. Maybe there we go. I can just do that. So let's spend a minute thinking about or talking about what the E and ESG looks like in the municipal market. When these can be any projects or activities that are supporting electrification. They can be projects that are looking to transition plans to renewable energy or renewable power. They can be projects that have some sort of prioritization for biodiversity. Any type of, we just hit on wildfire risk, but also watershed quality and protection is in there. Any type of planning on climate resilience or adaptation. A couple of transactions that, just for examples that we've worked on lately for green bonds, have been for clients in the Midwest who are planning for a climate migration. So they're really putting in place infrastructure to handle a much larger population, and really focusing on that climate migration, or towns and cities in the arid West who need to adapt and really kind of modernize their water systems for less water and more people. Let's move on, I guess, to what does S look like in the municipal market. When we think about social implications in the municipal market, we're looking at attributes and financings that offer any type of rate assistance programs. It could be first-time home buyer loans for housing authorities for their single-family mortgage programs, or even multifamily mortgage programs. It could be projects that are expanding transit service, or of course making broadband accessible. And this can even be like a multimodal transportation, so bike paths, or any type of accessibility to programs that issuers are providing. Think about healthcare in rural areas. Is there telehealth options that these bond financed activities are providing? We think about prioritizing rural communities, and of course, focusing on updating and really looking at best practices for infrastructure for water and sewer. The G in the municipal space, the governance, we really think about that as transparency. Issuers of debt in this market really need to focus and be clear to investors about how they're addressing risk, how they're addressing physical climate risk, how they're getting ready for the transition and addressing societal risks. Those can look different. It could be adaptation projects related to extreme weather, even decarbonizing activities, and of course, an equitable distribution of the bond proceeds to underserved communities. Let's talk a little bit about green, social, and sustainability bonds. So I mentioned earlier that, and I'm just going to use green bonds throughout the rest of the presentation as a proxy for all three, because it can be a mouthful. But really, a green or a social label is just that. It's a label attached to the bond. The structure of the financing isn't materially changed. These are conventional bonds, the same type of structure that would be offered, without the label. What's different about a green bond is that the proceeds are going towards programs or projects that have this positive environmental benefit. For social bonds, there's an added layer on there. So not only does it have to be an eligible category under the principles and the standards that are out there, and we'll walk through that in a minute, but it has to have a target population. So it has to be a category such as access to essential services, like healthcare or higher ed or affordable housing as a category. It also has to have a target population. So how, yes, it fits within the category, but who is being served by those bond financed activities, and even a little bit more granular than that, like how are they being served? What programs are offered to serve that target population? And it's really a best practice to use an independent external verifier. This is, think of an external verifier as just an assurance provider, similar to having, your financial statements reviewed by an auditor or CPA. We're reviewing these attributes and making sure that they're aligning with the standards and providing that assurance to the market. I mentioned that there's certain standards out there. Kestrel and other external reviewers aren't making up the standards. These are internationally accepted standards used for all debt worldwide. And what we're doing is we're interpreting them for the municipal market. There's two main standards out there that we'll go over. The first one is, the acronym is ICMA, so it stands for International Capital Markets Association, and they have a few different principles or standards out there. They have the green bond principles, the social bond principles, and if you have both positive environmental benefits and positive social benefits, then you're a sustainability bond. And then they have what they refer to as a sustainability linked bond. And we won't go into much detail on that tonight, but it is a standard that's out there. The other standard that's out there is a certified climate bond. Now, certified climate bonds are a green bond. It's just that the criteria that's associated with the certified climate bond are signaling to the market decarbonizing activities. So all the criteria and standards under CBI are aligned with the Paris Agreement. And their criteria and their standards, the bond finance activities actually have to reach numeric targets for them to be qualified for that standard. Some of the green bond standard under ICMA is really broad. It's a very broad standard. So you can finance renewable energy. You can finance pollution prevention control. Water and wastewater are, under the green bonds, where that certified climate bond, it's only signaling, decarbonizing activities to the marketplace. That was a lot of information. I went through fairly quickly. We can pause for questions, but I'm not seeing any pop up. So maybe I'll keep rolling, Kirsten, and we'll take questions at the end.
Yeah, Melissa, that sounds great. Can you talk just a little bit more about your experience with the Paris Climate Accord? You touched on that. Is there anything more you have to add on that?
Well, CBI, actually, all external reviewers that are out there in the marketplace have to be accredited through the Climate Bonds Initiative. So the Climate Bonds Initiative is an international nonprofit based in Europe. And like I said, their standard is a green bond standard, but all of their criteria is aligned with the Paris Agreement. So any type of transportation projects or renewable energy projects, they would have to align and show actually numeric targets for decarbonization, and all their taxonomies are aligned with the Paris Accord. Is that
great? Appreciate that. Yeah, if you want to just keep rolling, that's great.
Yeah, that is something that, and two, for investors, it helps investors, that might have impact strategies or thematic investing. Maybe the investors only want to align with decarbonizing activities or, net zero activities. That standard can help signal to the market that those investments would fit within that portfolio.
Cool.
Yeah. All right. So that's a lot of information on what ESG is and what it looks like in the municipal market, and tools that investors are using. And that's great. But why? Why would municipalities care? Or this is not even for municipalities. There's a lot of P3 projects out there. Community solar. Corporate activities that are going for loans. These are still the standards that green bonds are for. So it's not just for municipal market. That's just where Kestrel's expertise is. So we'll stick with that tonight. But for CRES members out there that aren't sitting in the municipal market camp, it's still applicable to corporate activities, and it doesn't necessarily have to be a bond. It can be any debt, right? So it can be convertible loans or notes or loan packages, and so I'll just leave that there. But why would anybody care about ESG or green bonds? What's driving all this interest in it? And it's really market demand, right? This chart here is a source from Bloomberg, and it's showing a very rapid and a rapid rise in sustainable debt issuance since 2011. I think in 2021, that's 1.5 trillion of debt was issued that came to market with a label. So one of these green, social, or sustainability bond labels. And Bloomberg estimates that sustainable debt issuance could reach 15 trillion by 2025, and that's just, you know, expanding at, you know, a third of the pace that it has for the last 5 years. And just to give, you know, maybe kind of a little bit of a concept of what 15 trillion means, the entire municipal market is 4.2 trillion. US fixed income is 46 trillion. And within that, corporate debt is about 15 or 16 trillion. So if it does swell to that size, that's the entire corporate debt market that's coming to market with these positive environmental or social benefits. And that's really going to help, you know, drive more projects to move towards this, you know, just transition to the decarbonized economy. There's other consulting firms out there that are calculating companies' spend on this data. So over 800 million is spent or was spent in 2021 for just ESG content. So any of those data products or, you know, putting indices out in the market. And then finally, you know, $57.5 trillion of assets under management have been pledged to net zero. So these asset managers, these over 200 signatories to net zero, they've pledged these assets to net zero, but that's great. It's great that there's that demand out there, but they have to have some sort of supply. So that's where green, social, and sustainability bonds come in, or signaling to the market through data what is the ESG attributes of each financing. They need that supply to fulfill their mandates to net zero. So a little bit, I guess, more in depth on labeled bonds in the municipal market. They've seen rapid growth as well, not to the extent that I would say the corporate market has, or even, you know, the European market, but we're getting there. In 2021, we had nearly 15 billion of par issued. That's 10% of what was issued in 2021, but really only 2% by transaction. It's still a pretty small amount, and you know, I believe the municipal market can have an outsized impact in transitioning us to this decarbonized economy, because like I said, they're nearly, you know, 2/3 of our nation's infrastructure is built, you know, or financed through municipal bonds. And more so than that, you know, your municipalities are writing all your zoning codes and of how developments are going to be built, and focusing on new roads and bridges and transportation, and really how we operate and work in society. So I think there's a really large opportunity for the municipal market to have an outsized impact through the projects that they finance. And really our goal at Kestrel, through our Kestrel Verifiers line of business, is to, like I said, make science accessible to the market by calling out material facts and meaningful and relevant information in those financing activities for investors to understand. So, I mean, we hit on a little bit why issuers would look to go through this extra process of adding a label to their bond, and that's really demand. Attracting new investors to buy your bonds can really put pricing pressure on your financing, so it can lower your cost of capital, right? The more demand you have, the more pressure that's put on the prices out there, and you can really come out of the deal with a lower cost of capital or a lower yield. There is also a really big opportunity for issuers out there to showcase their leadership, right? There's a lot of great things that issuers might be doing, that they've already adopted climate action plans or sustainability plans, and when they're financing new projects, it's aligning with those plans. So you're really just telling the market a great story. You're telling them the good work that you're already doing, and you know, you're improving your transparency with your constituents as well. So a few things about issuing green bonds in the market is really, if you're going to go through issuing with a green bond, you want to do it the best way possible. So be a best-in-class issuer, and to do that, there are, you know, a few things that investors are looking for that can give, you know, your bond the best opportunity to achieve that lower cost of capital or have more demand. And the first one is really transparency. Investors are looking for you to tell them clearly what you're financing. It's not, it sounds, you know, like a no-brainer, but there are so many issuers out there that aren't really describing in their offering document really a clear description of what's being financed. They might have a list of I don't know, bonds are going to improvement projects that may or may not include, and then they can list out, you know, 20 of them. That's difficult for these investors who are looking for these positive environmental or social attributes to really determine if there's a positive impact there. You also want to show alignment with adopted plans. So I just mentioned, you know, maybe there's a sustainability plan, a climate action plan, and you want to show how, you know, there's intention there. You've already adopted these plans. It's part of your entity's mission, or to move towards this decarbonized economy, and you're just showing that your bond finance activities are aligning with those adopted plans. You know, one of the biggest and most valuable things that issuers can do out there, and I think it's almost more important than this transparency around what's actually being financed, is reporting. What are the outcomes? What are the impacts of your bond finance activities? How much you know, greenhouse gas emissions was reduced by this project? How many low income families did you serve by this new housing project? So those things are really important for investors to see. And then of course you want that assurance to the marketplace that somebody that's qualified has come in, reviewed those attributes, aligned them with the standards, and made the market aware of that. So we have a little bit on lower cost of capital, and I apologize for this really busy chart, but surprisingly, there's not a whole lot of analysis out there yet, not in the municipal market anyway, that's showing this relative value for green bonds. So this is what's out there, so this is what we'll use. There are, in some cases, instances where we've seen an actual, what they call a pricing premium, or also termed greenium, where issuers have come to market on the same day with what we call a vanilla bond, so just a non-green bond, and a green bond. And it's been from the same issuer. It's had the same financing structure, so same, you know, rating, same final term, same couponing, everything about the structure is the same. It's very comparable. And the green bonds have outpriced the vanilla bonds. And what that means is just that they've received a lower cost of capital, that investors are willing to pay a slightly higher price because they want that green bond, which means a lower yield or a lower cost of capital for the issuers. And this chart here, while it's busy, in the green line is showing you a generic, AA, which is a solid, credit rating, AA green bond credit, and then a generic AA revenue credit is the red line. And you can see that even in the secondary market that these bonds are out there are trading at a lower yield, right? So that's, and what happens with the secondary market and these bonds in the secondary market is they're used to inform pricing when issuers come back to market. So the capital markets or underwriters look at, or investors, all market participants look at two main points. They look at what's comparable in market at that time, and then they look at history of your bonds outstanding. So the history of your bonds outstanding that are already trading at a lower cost of capital might inform a lower cost of capital going forward. So it's still a little early to see. Really, we need more supply in the market to do more types of analysis like this. It's already showing up in the little bit of supply that we have, that there is a pricing advantage for the green bonds. And off to the side, I just have a list of, for issuers of what we've actually seen in the primary market, where there's been that pricing premium and that lower cost of capital achieved for those issuers. I'm not going to spend too much time on our exact approach, but I wanted to leave it in here in case there's any interested parties out there and looking to have their financings looked at for eligibility for a green bond. And one of the things I will say about our approach in the market is really to provide that integrity and that science-based approach. I'm going to zoom out here for just a minute, so bear with me. Largely what's going on is we're blending kind of business models, or the business model is changing in capital markets. They're not just focused on a credit rating or how the debt is going to be repaid. How likely is it that the debt's going to be repaid? The business model is changing to start incorporating, right, those risk and opportunities from externalities that we're talking about a little bit earlier. And so because that's changing, you really need to have a way to make that science accessible for the capital markets to understand. And in a nutshell, that's really what we're providing through our verification service. And to verify the green, social, and sustainability bonds. So let's walk through some case studies and kind of talk about the relevancy of maybe ESG to CRES for a little bit. I have 4 case studies listed out here. And these are just bonds that we've verified over the last year or two, and a couple of them are in Colorado and a couple of them are in California. But just to kind of give an idea or an example of what a green bond would look like here in Colorado. So RTD, I'm sure we're all aware of RTD. They issued sales tax bonds for their fast tracks project back in, I think, December of 2021. And that financing came to market with a green bond label, and it was a green bond, climate bond certified. So it was able to meet those numeric targets in line with the Paris Accord. And their projects were financing infrastructure for a fully electric commuter and light rail. And I will say, Kirsten, at the beginning of this mentioned, and I looked a little bit on your website before sitting in on the presentation tonight, about different legislative matters that were out there. And recently, I think it was a day or two ago, there was a news article that came out that Colorado, our CDOT, has canceled highway expansion. Expanding, largely, I-25 because priorities are shifting, and they're going to look at rail and look at putting in more rail in and around the metro area, which is fantastic. And so there's other opportunities in the future here in Colorado, and that's really significant, right? Because transportation is the largest contributor to greenhouse gas emissions in the nation and in the metro area. So that was exciting to see. Another case study was a sustainability bond for the Housing Authority in the City and County of Denver. In 2021, they were financing a multifamily housing revenue bonds. And that project was to build, new rental units for low or moderate income renters. And those units were actually built to a green building standard. It was called the Enterprise Green Communities Standard. So that would be like an equivalent. There's lots of green building standards out there: LEED, well-built, Enterprise Green Communities. And so this bond had both positive environmental or social benefits. And so we were able to put a sustainability bond on their transaction. What's not on here is CHAFA, but I would be remiss if I didn't mention them. So Colorado Housing and Finance Authority, we've done 6 or 7 transactions for them for social bonds. So they have a single family loan program where they provide affordable housing or affordable loans. And every time those come to market, we review them, and they have a social bond label affixed to them. I think two of some of the more interesting, probably for this group here, transactions that we've worked on were for issuers out in California. They have a California Community Choice Financing Authority. And that authority was put together really to only finance, it's a conduit authority, so it was put together to finance projects for CCAs, so community choice aggregators. And community choice aggregators are programs that allow governments to procure power from alternative sources and for their constituents, but they still have the ability, or they can still receive or transmute. They can still receive transmission and distribution from existing utility providers. And these projects were, one was a green bond and one was a green bond, climate bond certified. And they had a very interesting structure. It was, they call it a prepay structure. So these financings had a prepayment of 30 years of renewable energy or renewable electricity. And that structure is not, it's not necessarily a new structure in finance. It's used in gas all the time, and it's been very successful. And they just kind of transported it over to the renewable space. And two of the really, I think, most powerful things about these types of financings are that, one, it brings down the cost for any type of carbon-free emitting resources, and that there's there's this long-term investment for renewable energy. And so those bonds, and we have one more coming out similar to that. And so those projects are really quite interesting. There are, I think, 10 states that have passed legislation for CCAs, and I saw that Colorado has and I don't know where it is, maybe members here tonight do, but Colorado actually has legislation in session this year for a CCA program. So one of the things that that I can tell from your long history and just looking through your website and members and a little bit of what Reed had mentioned to me is that this is a group that likes to learn about and hear about innovation. And so I just put this here. We're not going to walk through it, but we're really, I wanted to put it in here because we're a leader in the space, in the municipal space for innovation. And I chuckle at myself every time I say innovation and municipals in the same in the same sentence. Because it's not something typically you would think about in the municipal market. It's really been using the same procedures and same financing structures for years, and to kind of disrupt it with a different way to think about project finance has been kind of fun. So these are some of the projects that have come to market that Kestrel has worked on that have been first in the market. So I think I want to spend just a minute to talk about to members tonight, to speak about really what incorporating ESG practices could look like for you and your area of expertise and what you do. You know, the United States has, you know, aggressive but much needed emission reduction targets of 50 to 52% below our 2005 levels. And I was looking at a research report the other day that made it live for me, so I wanted to put the quote in there. But that looks like, you know, the same as zeroing out, you know, emissions for the entire state of Florida for the next 9 years. We can't keep talking about moving to a decarbonized economy. Our projects need to come to market now with those activities already in there. And I think you know, Colorado even has I think in January this year they passed a greenhouse gas pollution reduction roadmap that's showing that Colorado is going to reduce our greenhouse gas emissions by 26% by 2025, 50% by 2030, and then 90% by 2050. We're kind of right in line with the United States, and part of what's going to get us there are projects like RTDs, or more developments that are incorporating renewable energy or energy efficiencies within them. I think for anyone here tonight who's working in a government agency, the way I would like to think about ESG or green bonds is making sure that you're communicating and addressing to the market the climate risks that are involved in your bond finance activities, and really showing how your projects are aligning with the standards that we went over tonight. I think for anyone in the room who's an investor, so if you work for a university or you work for the government pension plans, or even your own corporation of how you're investing in your portfolio, you can start to prioritize investments that have attributes that are advancing the just transition to a decarbonized economy. And finally, for any type of legislators or lawmakers in here tonight, you can really think about incentive programs. So not just the legislations for, the CCA program that we're talking about, but incentive programs for issuers to issue green bonds, and start developing standards and benchmarks for those issuers to use. And that's it. I think the last thing I would say is, thank you very much for having me here tonight. And I just make a note that if your company or entity is interested in issuing a green bond, that we wouldn't be contacted at the front end of that. As consultants, we're more towards the final end of the project. So once you've determined exactly what you're going to finance, and you have a clear project list or budget, then you can reach out and we can discuss eligibility.
Awesome, Melissa. I actually do have a question or two if you'll allow me.
Yeah, please.
Yeah, I just wanted to make a comment that regarding the green bond case studies you reviewed, the RTD highway expansion not being approved and instead rail expansion getting the nod. What a great win. And thanks for the mention. I think that's a very worthwhile thing for us to pay attention to. Yes. And we have friends in high places in Colorado that are very interested in clean transportation. Wanted to thank you for your suggestions, also for the CRES community's involvement in further reductions in greenhouse gas emissions. Thank you so much. And here's my question. You talked about a science-based approach for the capital markets. Can you talk just a little bit about how Kestrel sources its ESG data? Is this kind of science-based as well? I'm a little bit of a data, like a geek on that stuff. I don't know, don't get technical, but I'm just curious.
Yeah, sure. I'll do my best to answer that without getting over my skis. So my role is really kind of sales and strategy, and so our methodology for our ESG data was developed, by our CEO and founder and our environmental and social scientists. But really what we're talking about when we talk about a science-based approach is, one, all of our data is 100% original, right? So we're not scraping other data sources out there. We're originating the data ourselves. So we are looking for, this is where the practitioner's approach comes in. We are looking for best practices. Are the bond finance activities moving us toward a decarbonized economy? Are they business as usual, or are they moving us away? And there's methodologies that we've developed, or a methodology that we've developed for, I think we have, and the municipal market is so nuanced, 100 and almost 130 different sectors and subsectors that have different material factors within those that we are looking at. So when we're sourcing that data, we're going out to other data sources and looking for those best practices and making sure that, we've sourced that and then calling them out in those in the bond finance activities. Does that answer your question, or you have more detail? I'm happy to dig in more, but
no, that's great. I appreciate that. It's something that comes up as ESG is such a new but incredibly relevant and timely topic. So thank you so much for providing your expertise and time, sharing that with us tonight.
I was just going to jump in. We actually do have some questions that came in from offline, so I'm happy to read those out to you, Melissa. So just starting with the first ones, you mentioned at the beginning bonds being used for kind of fire impacted communities. Are there opportunities for these communities like Superior, Marshall, Louisville? to participate in this market and obtain funding quickly?
Yeah, so it's I think there's kind of two parts to that question. It's really one, does what does Louisville and Superior need to finance for mitigation, right? They'll determine what that is, and if those activities or the project that they're financing aligns with one of the green bond categories, then we can certainly, look to work with Louisville and Superior on affixing that green bond label. So one, they have to determine, what they're gonna, one, if they're gonna issue any debt. Two, what is that debt for? What projects is it going to be for the mitigation or the rehab, and what they're, and then we would look to make sure that it aligned with one of the green bond categories. That could be climate change adaptation. It could be, fire resilient building codes. It could be, not in Louisville's case, it's not going to be forest thinning, but yeah, so hope that somewhat answers
Okay.
their question.
Yeah, no, I think that was good. And just kind of segueing off of that, what communities are you seeing in the Front Range that are actually issuing these bonds in the markets, if
So,
any?
so yeah, so far with verified transactions, what we've seen is kind of the ones I've listed out: RTD, City and County of Denver, Housing Authority, Colorado Housing and Finance Authority. There might be other issuers who come to the market and talk about, they call it a self-label, where they just go to the market and say, this is green because I say it's green. Sometimes we've seen those. I think the next large opportunities in the Front Range would probably be universities. So,
Okay.
yeah.
Are these bonds typically asset secured or general future revenue secured? If asset secured, what type of assets?
Yeah, so for green bonds, the security doesn't matter, right? So we're not a rating agency. We're not opining on the credit quality of the bond financed activities. So they can be GOs, they can be rev bonds, they can be COPs, the type of debt instrument, they can be asset backed. They don't have to be asset backed. We're not actually looking at that security. So the security is, it's telling bondholders how the bond's going to be repaid and how comfortable they feel with that. We're not looking at that. We're only looking at the environmental or social attributes of the financing.
Interesting. Okay.
Yeah.
The next couple ones are kind of similar. So the first question is, can these bonds finance sustainability/resiliency education projects? And then the second question is, you mentioned these types of funding being applied to resiliency projects and things like community solar. Have you seen any examples, in and around Colorado being used for community or school gardens or K through 12 sustainability education?
Okay. There's a lot in that question. So I'll start with education. So yeah, we've not necessarily in Colorado, but throughout the nation. Newark, New Jersey had an amazing sustainability bond. So I'll unpack that one just a little bit. They had an energy performance contract for the entire district. So they had energy performance measures that they were doing at every single school within the district as part of how it aligned with the green bond standards. And on top of that, they had really cool programs and education around what those energy efficiency measures were, and kind of incorporated a large educational component of that to all the schools within the district. And then the social part, so in in our world, sustainability has a meaning for sustainability bond, right? So it's those positive environmental and positive social attributes together come together to make a sustainability bond. So when I talk about sustainability, that's how we're defining it. So in Newark's case, they had, a target population. So they had a certain amount of kids on, free and reduced lunch or low socioeconomic status that we were able to define and fit within that target population. So when they came to market, they had a sustainability bond. San Diego School District last year came out with a green bond, and they had amazing they had a whole capital projects, a whole list of capital projects that they were funding with their GO bonds. Some of it could be, electric school buses. One of the amazing things that they were doing is they actually were installing their own solar to power a lot of their schools. It was one of the main projects within San Diego School District. So in a nutshell, to answer the question, yes, we do see it in education. Yes, it is possible. I haven't seen it in K through 12 here in Colorado, but that doesn't mean it can't be. So K through 12, community college, universities, any type of, any sector that fits within the municipal market has this opportunity, if their bond finance activities align with the green or social bond standards, then they absolutely can come and talk to us and we can determine eligibility.
Could you expand on that a little bit, maybe for an example of, say, here in Colorado, there's a lot of school districts that are starting to look at electrifying their bus fleets for, a lot of good reasons, saving, lots of money being a big one. Are there, who initiates that? Like, is that something, and, is there a way that, our members, audience members tonight, or just anyone in the community could go to their PTA meeting or start a community group to kind of rally behind, hey, let's get this bond passed, to electrify these buses, or efficiency improvements throughout the school district?
Sure. So our role is really kind of at the end once the bond has already come together. But typically what happens is there's going to be a list of capital projects that the school districts need to finance, right? They have a running list. We need to build this school, we need to do retrofits here, we need to buy new school buses, etc. They have a capital projects list. And within that list, if there are, if that entire list comes to us, that project list comes to us, and every single thing on that project list aligns with the standards, we would be able to, provide what we call our second party opinion. So that's our report out to the market of how their bond aligns with the standards. So members out there who are interested in moving this forward, whether they go to their PTO meetings or they sit on the school board or whatnot, they would just have to look at prioritizing projects for the school district that are going towards energy efficiency, retrofits or electrifying school buses, right? If that's important to them. And if it's on the cusp of we're going to buy diesel buses or electric school buses, hey, maybe one of the opportunities out there is that if you bought an electric school fleet, you can come to market with a green bond and perhaps lower your cost of capital and capture it on that end, right? That's why energy performance contracts are so great, right? Because they're reducing the energy use and providing savings to the issuer all at once. And if they're already doing that, why not finance those with a green bond and attain a lower cost of capital in the market? Does that address it a little bit more for you?
Yes, thank you. No, that was great. Next question. What sort of signal do you see that's needed for on-the-fence investors to join this ESG movement? Are there holdouts? What would you say to the naysayers of ESG?
Well, I mean, I think there's naysayers in anything, but what I would say is, I mean, I'll go back to the charts of how fast um, you know, sustainable finance is growing and all the assets pledged to net zero, and that business models are changing. I think I can't remember the exact quote, but I read something the other day that in by 2030, Gen Y and Gen Z will exceed assets under management from baby boomers. And those generations are really looking to align their values with investment. And this is it's not a trend that's going to go away. It's here to stay. There's going to be an adaptation of this business model. Capital, money is looking to flow into projects that are moving us towards a decarbonized economy. That is where the money is flowing. So for naysayers out there, I guess you just need to be kind of on the front lines and see that these money centers, really there's a few money centers out there that have the majority of capital that's moving back and forth in the capital markets. Their money is moving towards decarbonization. They want to put their money in assets that are moving in that direction. I would also say, Europe's a few years ahead of us. They've already passed legislation, and investors are worldwide. There's very few investors out there. Yes, there's smaller shops, but there's very few investors out there that aren't, worldwide investors. The SEC has, request out now for comments on climate disclosure and guidance around scope 1, 2, and 3 emissions. And it's yet to be determined what they'll actually come to market with. But there is going to be some new regulation around how we disclose climate risk. And why not talk about these positive attributes within your bond finance activities if you have them, right? Investors are looking for it. Regulation might be coming, so it's to your advantage to be the carrot, not the stick.
No, that's perfect. I'm glad you mentioned the intergenerational wealth transfer because, like I said, this trend is not going anywhere. Gen Z and beyond, they're going to be prioritizing these things, these types of projects, these types of assets and, market instruments. And, I think that, people go where the money is. And, a lot of time, a lot of times these are getting, at market or better returns. Sometimes in the renewable energy, it's getting cost competitive with traditional sources. So, building off of that, how is the industry handling greenwashing among green bond issuers? For instance, if a green bond, in many quotes, is issued by an oil and gas firm under the guise of improving energy efficiency in their operations.
Yeah, so there's definitely more scrutiny placed on greenwashing. It's a now term everybody knows. I think that BC actually handed out its first fine 2 or 3 weeks ago for greenwashing. So that was the first fine that came out, and they are establishing stricter rules and standards around, labeling, right? Any investments that are green, social, and sustainable. So I would say that yes, there's much more scrutiny out there, and I think that's going to continue to be the case. That it's not going to be kind of the Wild West anymore.
Well, that's good to know. Much like the labels you see in the store, just the truth in lending, when for getting your mortgage. Just I think having that scrutiny, having those standards, and refining them over time to kind of weed out any outliers or things that are clearly greenwashing is great. That was our last question. I'm not seeing anything else coming through the chat. So unless Kirsten, you have anything else, I just want to thank you, Melissa, so much on behalf of BCRES and CRES as a whole for presenting with us tonight. Just a reminder for our audience members, we will be sending out a recording of this, as well as editing it and publishing it on the CRES YouTube channel. So check that out in the coming weeks. Kirsten, anything else on your end?
No, and Reed, thank you so much for pitching the questions. Melissa, thank you so much as well. We greatly appreciate your time, expertise, and the deep dive, into this area. Very, very much appreciated. I believe we can be ready to check out here.
Absolutely. Thank you so much for getting on.
Thanks to everyone for attending.